if you look at the highlights of Q4 for us, was the improvement in our net interest margin. Net interest margin, in spite of the fact that there were periods of tough times on liquidity, net interest margin has actually moved up by 10 basis points from 3.65 to 3.75, and that has had a salutary impact also on the return on assets. Return on assets has also moved up to 1.91 from 1.77, and also improvement in our return on equity by almost 200 basis points. If you look at the P&L figure, the revenue growth for Q4 was 27%, and the revenue growth for the full year was 33%. And that has been supported equally by growth in the net interest income as well as growth in our fee income. Our other income actually in the quarter grew by as much as 42%. As a consequence of this, both our earnings per share and the book value of the stock has moved up. So net profit for the year for the quarter at 396 crores, as against 307 crores, has moved up by 29%. Operating profit moved up by 32%. Our net interest income, as I mentioned, moved up 18% during the quarter. But you've got to see it from the perspective of the base effect, because Q4 of last year, our NIMs improved by 24 basis points, and as a consequence of this, there was a surge in net interest income last year. But more important is the quarter-on-quarter increase. So net interest income quarter-on-quarter increased by 7%, and other income quarter-on-quarter increased by 9%. Overall revenue, therefore, increased by 27% for Q4 and quarter-on-quarter by 8%. Net profit, as I already mentioned, 29% year-on-year and 14% quarter-on-quarter. That's the headline numbers. You can see in the balance sheet growth as well. Our loan book advances grew by 24% and quarter-on-quarter grew by 5%. Of course, corporate advances grew faster than the retail part of the business, because a lot of our retail business is really the vehicle finance business, and the vehicle finance business is still showing a slow uptick, and therefore disbursements there were much lower than we had anticipated. Deposit growth quarter-on-quarter was 8%, and especially of note was the growth in our CASA. CASA grew quarter-on-quarter by 9%. SA, in fact, is the bright spot and remains the bright spot in our balance sheet. SA for year-on-year grew 41%, and quarter-on-quarter grew 7%. The book quality has remained stable, and we are very happy and proud to say that our credit costs came out lower than we had anticipated. Credit cost for the quarter the gross credit cost was 13 basis points, and for the full year, the gross credit cost for the bank was 48 basis points. We had budgeted for a credit cost of 60 basis points. So there is stability in the book. Gross and net NPAs have hardly shown any movement, and the restructured book has also not moved by any significant figure, just 2 basis points. In addition to this, I think the infrastructure part, we had said that we will cross 600 branches during the year. We ended with 602 branches, which means that we have opened over 100 branches during the financial year, which is as per plan. And together with that, we've also opened about 250 ATMs. So the branch network is also grown, while our balance sheet has grown as well. The total headcount of the bank at the end of the financial year was 15,900, which was a growth of over 4,000 headcount increase during the year. So both in terms of top line and bottom line, we've been able to maintain healthy double-digit growth. We have kept asset quality very stable. And mind you, these results are after incorporating for the full year a mark-to-market loss on our GSEC book of almost 90 crores, 88 crores to be exact. So if you were to normalize the profit, then the profit is higher by the extent of the mark-to-market loss that we have undertaken. So I think that's really a summary of the results. We are happy to have closed the year on a pretty decent note, a high note, I would say. Quarter 4 has kept the trending that we've seen in the previous quarters, and the full year performance is also kept by and large in line with what we had anticipated.